Hello, happy May 6th, everyone. Today I'm going to talk about the CME, the Chicago Mercantile Exchange's proposed limitation on price fluctuations on gold and silver futures to 1% per day. First, I'm going to tell you what it's about, and then second, I'm going to make an appeal to all gold and silver bullion dealers as far as how they can break the CME, because this is definitely an effort on the CME, the Chicago Mercantile Exchange, to cap gold and silver prices, and I'll tell you why. I believe that to be 100% true. Now, for those that just think of the CME, Chicago Mercantile Exchange, to be just another regulatory body like the CFTC, the Commodities Futures Trading Commission, you are sorely naive, because these regulatory bodies basically conspire with the bankers that are on their side, basically to help the bankers just become incredibly rich. Because if you follow the money trail, you'll see that a lot of people after retire from these regulatory agencies get multi-million dollar paying jobs, either as an industry lobbyist or with some company that they were supposedly regulating, that they helped to make rich by ensuring free markets did not exist. Now, some of you know that back in 2009, I started basically saying forget about the CFTC because they're just a bunch of crooks on the side of the banking criminals, and that to support my opinion, I said, hey, I wrote Bar Chilton at the Western banking cartel, which now 100% has been proven, even so much so that even mainstream media has picked up these stories of these bullion banks manipulating the price of gold today, because they can't avoid it. It has even gone mainstream to some effect. But back then, everyone believed these regulatory agencies to be on the side of the citizens instead of on the side of the bankers against the citizens. So when I said I wrote Bar Chilton in 2009, who was then the commissioner on the CFTC, about the egregious, obvious, blatant gold price manipulation, lower, of course, by the bullion banks, he wrote me, oh no, the Western banks aren't manipulating gold at all. It's the Chinese that are manipulating it higher. So after that, I said, forget about Bar Chilton. People say, oh, you're mistaken. He's the only good guy that answers any email sent to any commissioner on the CFTC. And I'll give you that much, because he answered me within like 30 minutes when I sent him my proof of the gold price manipulation. And but you know, he was only answering and giving lip service to keep people at bay for 4 years. For 4 years, in 2009, I said, forget about the CFTC. People said, no, just you wait and see. He's launching an investigation into silver price manipulation, and he's going to bring all these banks down. What happened? He resigned without a single thing being done, and he strung people along for 4 years. So just like in the same situation, the CME is just a criminal entity that is part of the criminal banking cabal. And the reason they're considering putting limitations, now price limitations, is because gold and silver are set to explode higher now. So that's the reason they want to put this 1% cap. Because for years and years and years, when people complained to them, and hundreds of thousands and possibly even thousands of people wrote them asking them to look into the gold price manipulation and giving them credible evidence of HFT algo trading that was knocking down gold by more than 2% in 20 minutes. In fact, look at this chart. I'll put that that was compiled by Dimitri Speck of GATA, the Gold Antitrust Action Committee, that he showed there was over a dozen times in 2008 when the banking cartel smacked down the price of gold more than 2% in 20 minutes. Can you imagine if that was happening in the U.S. stock market? They would have interceded immediately and put an end to the shenanigans. But since the bankers are obviously pro-U.S. dollar, anti-gold, anti-silver, anti-real money, they allow these shenanigans to go on and on and on. So I'm going to put this chart inserted right now, so check it out. So if you look at that chart, again, you see a dozen times in 2008 they smacked down the price of gold by more than 2% in 20 minutes, which would be impossible to do if the gold and silver prices were set by the actual supply and demand of the real physical markets. Because in order to affect such a steep decline, 2% in less than 20 minutes, they have to sell tons of gold into the open market. But what are they doing? They're selling tons of paper gold. That's right, paper gold backed by air. In other words, these bullion banks didn't have the physical gold that they were selling into the market, in the futures market, to knock down the price of gold back then. Now, I looked, last year obviously was an epic year for bankers, again, smashing gold and silver prices to the downside and manipulating them illegally and immorally. And if I looked just at the first 6 months, I found 9 days, just in New York alone, when the price from high to low in New York was, where gold was pushed down more than 2%, 9 days in the first 6 months alone. So if you look at less than high to low, less than 2% in New York fluctuation, not just in less than 20 minutes like the chart I showed you, but over the course of the entire trading session, you can find many, many more. So I assume that went well over a dozen times last year. If you're not looking, just limiting that 2% smash down to just 20 minutes. Now, the reason that the CME is trying to cap the fluctuations to 1%, because they know gold and silver are set to go much, much higher now. So they want to cap the price, which is ridiculous, because a lot of times gold and silver actually will open up more than 1% in Asia. So by the time if it opens up in New York and it's already trading 1% higher, that means that the CMA puts this policy into effect that gold and silver cannot go any higher at all during that trading session in New York, depending upon how they define, well, if they say within 24 hours, I'm assuming that that counts the prices in Asian markets and in London market. So what that might do is it might cause, I don't know how they're going to deal with the arbitrage possibilities, because if the Asian markets don't put this 1% cap on the price fluctuation in their gold and silver futures markets, then you could have huge, huge arbitrage opportunities between the gold and silver prices in Asia and the gold and silver prices in New York. So the reason I say that they're discussing this policy now in preparation for gold and silver prices going much higher over the next several years is because if you look at the extreme tightness in physical gold supply, that is the reason why there's been so much resiliency recently. Now, on April 24th, I sent to my paying subscribers a bulletin saying that the bankers were definitely looking to take gold down below 1,200 again. And you had, again, the propaganda from Goldman Sachs saying gold's going to go below 1,000, which they issued at the end of last year, and then went up to 1,300. And then they issued again about a month ago to try to push the price of gold down. But you could actually see that the bankers are trying to push the price of gold back below 1,200. But I told my clients, due to the physical tightness, I said, even were they successful in taking gold down to 1,200, it would only last a matter of days before gold would strongly rebound if this tightness in the global gold supply persisted amongst this persistent demand. And what happened the very day I issued that alert saying there would be resiliency in the mining stocks, which I also included in that alert on April 24th. Gold was slammed by the Western bankers, $30 an ounce to open up, but immediately rebounded in the same trading session by $22. You saw again the banking cartel, the pro-US dollar, anti-gold banking cartel, trying to slam gold prices last Friday, even though gold and silver both boomed. How do I know they were trying to do this? Again, by releasing ridiculous statistics, trying to sell the whole recovering economy meme, which is so ridiculous, because they said, oh, they released stats saying that U.S. unemployment had dropped to 6.5%, something like the best in 6 months, and that an amazing 200, and I think it was off the top of my head, so excuse me if this number's wrong, but I think they said like an amazing 288,000 jobs were added in the month of April, trying to sell this whole recovering economy meme. But that is ridiculous when you have 59% of the eligible workforce in America not working. 59%. And then you have over 16 million families in America with not one person employed. That means every single person in their family is unemployed. Over 16 million families. So how can you have unemployment rate at 6.5%? Obviously you don't. And in fact, you had actually 73,000 more people unemployed. And they're saying unemployment is going down. So obviously the banking government complex is now just resorting to straight out lies, straight out lies to try to sell this recovering economy meme and to try to slam gold. But again, because of the tightness in physical gold, they failed. And though they are trying to slam the price of gold on the back of this wonderful economic news they're trying to sell you, which, you know, being sarcastic, is just a bunch of lies, they failed due to the tightness, the extreme tightness in the physical gold market. So that's what these bankers are seeing. That's what the CME is seeing. That's what this Western banking cabal like the Rothschilds, the Rockefellers, the Warburgs, the Morgan family, that is making them nervous, and they know that they're not going to be able to cap the price of gold and silver soon. So they're trying to now institute this policy, not when everyone's complaining that these bullion banks, the same ones I just named, the same families I just named that were manipulating the price downward. No, they never capped it. It's fine with them if it goes down dozens of times a year by more than 1% is what the proposal is at the time, the rumored proposed daily fluctuation limit. I just told you 2%, by 1%. My God, if they, you know, capped the downward, if you look at the downward movements of 1% in gold and silver in 2008 and 2013, it was probably dozens and dozens and dozens of times throughout the entire year. But now that it's set to explode, that's why they're discussing this, to try to cap the price of gold and silver. So here's what the bullion dealers, here's my appeal to the bullion dealers. If this takes place, if the criminal CME decides that they want to cap the upside of gold and silver to 1% when they did nothing for a decade about capping the price declines, when the bankers, bullion bankers, were slamming the price downward. They did nothing to cap the price downward. Now they want to cap it to the upside. Here's what you can do, because I know that all bullion dealers know, no matter where in the world, whether you're in New York, whether you're in Tokyo, whether you're in Rio, whether you're in Johannesburg, or wherever you are, you know that these spot prices are fake. And they're not nowhere close to free market prices for gold and silver. Because if you did not know, because every bullion dealer puts a fairly large premium on the real gold they're selling. For example, if you go to APMEX, one of the largest bullion dealers in America, their current price for a 1 ounce gold bar right now always has a $36 to $40 premium over spot. If you look at just 2012, Canadian silver maple leaf coins, they have a 25 or 26% premium over the spot price of silver right now. So they know that these are bogus prices. They're not willing to sell them at bogus prices. And if you look in Tokyo over the past several years, I have seen $50, $60, $70 premiums over the spot price for real gold being sold in Tokyo. So my appeal to the bullion dealers is that if the CME caps it at 1%, that if you see the prices going up sharply one day because the dollar is getting slammed in valuation, and it is nearing that multi-year support level right now. If it breaks through that, they know gold and silver are going to go ballistic. So they're trying to cap it with a 1% cap right now. And so I'm not saying it's imminent, but they know it's coming. They know it's coming sometime, very likely within the next 18 to 24 months. You're going to see a surge in gold and silver prices, and you would have seen spectacular spikes, except for this cap that they're putting in place now. So bullion dealers, if you see that, or if you see there's a large discrepancy in the prices in Asia, I just don't want to see the Asian bullion dealers raising their prices. I want to see all the American bullion dealers raising your price, because this is how you can break them. If the divide between real physical gold bullion, real physical silver bullion, and the fake spot and paper prices that they set is so enormous, then everyone's just going to ignore the prices on the LBMA and COMEX. They're going to ignore them. They will become meaningless. And everyone will just look to the real price they have to buy, which they should be doing anyways today. But a lot of people don't even know there's a distinction and there's a premium. When I tell people, that's not what you can buy, you know, real gold and real silver at if you really want it. It's the spot price or this price flashing across your screen, your desktop every day. They're like, really? Like, a lot of people don't even know that because they don't deal with gold and silver. So if that becomes common knowledge that there's massive premiums, like 25, 30% premiums on real gold over spot, everyone will just forget about the spot price. So bullion dealers, you got to be smart. You're either on the side of the bankers if you keep your prices set to this 1% cap if they do that. But if you know demand is soaring and supply is tightening, if you're on the side of the people, you will free it and you will allow your bullion prices to rise much higher than the cap price, possibly cap price by the CME. And any bullion dealer that's courageous enough to be on the side of the people instead of on the side of slavery, then I will get you on my YouTube channel. I will promote you to all my clients that all buy physical gold and physical silver. So hopefully you will understand that you do have power in your hands to break this cap if the CME decides to try to cap the price of gold and silver when it really gets going and when it really starts rising. Okay, that's the message for today. Please do pass this on to everyone you know, especially if you know bullion dealers, you know people that own bullion shops. Please pass it on. I myself am not a bullion dealer. I don't deal with gold mines. So the people on LinkedIn that are trying to sell me ore crushers and mining equipment, I don't deal with mining gold specifically. I'm just a consultant in that matter. Okay, thanks a lot for watching. Stay curious as always. And remember, we are what we think. So stay positive. Take care.